Hey everybody, and welcome to Project Premium Harvest. My name is Matt. In today's video, we're going to be going over my portfolio's performance over the last week. We're going to talk about the account overview, how the fund has performed and traded in the last 5 trading days, and then we're going to talk about major changes to the account from this past week, and then what I plan on doing in the future. So let's begin. I'm going to give a quick overview for any of the new viewers. In this account, I took an $83,000 HELOC loan against a rental property I own. I threw that money into Robinhood, borrowed against it with margin, and I invested into high income ETFs. And over the last 10 months that I've had this YouTube account and this high income portfolio, the intent for this portfolio is not necessarily growth. Sure, I would like my account to grow over time. However, the goal of the account is income, but that income is not at the expense of your initial investment. So that's kind of what the premise of this channel is about. So let's get started. Currently, my account is valued at $111,732.20. For any of my returning subscribers, you're going to see my account jump about $35,000. That's because I had some Oracle shares in Fidelity that used to be my previous employers. They gave me a stock grant of about 200 plus shares. Therefore, instead of having Infidelity where I'm not really like borrowing against it, trying to make more income, I decided to move it into Robinhood One because I like the platform a lot better. It's a lot more user friendly. It's a lot more simple. Fidelity's like, you're like an old fashioned, investor with open to close, sell to close. I'm not into that kind of stuff. I like simplicity. And the number 2 reason is I would like to borrow against that shares. I'm never going to sell the shares because it's just going to be my long-term growth, hold it, but I'm going to borrow against it so that I can squeeze out a little bit more money every single month and every single year. Kind of the point of bringing the shares over to use to make more money. Now that we talked about the account and some of the changes I made, I'm also in the process of selling a house that I used to live in, and I bought a new one. I moved a few months ago, but the house I'm going to sell, after I'm done selling that house, I'm put some of the money into savings because of course you want to have a little bit of emergency fund, but some of the money I'm going to make off of it, I'm going to throw it into Robinhood. But then the whole point with this money that I'm making is going to be, I'm going to try to invest into actual stocks. So I'm going to buy like 100 shares of each, and then I'm just going to run a covered call strategy against them. And the reason why I want to do this is because these high income ETFs, there's a lot of NAV erosion. And for me, I'm kind of thinking about it more and more, where it's like, maybe I can just not have to deal with NAV erosion. I pick good stocks, invest in them, have 100 shares, and then just run a wheel strategy on them. So that's kind of the thought process. I buy 100 shares of, maybe the SPY, right? Which you need $60,000. So I think I'll make about $60,000 off of that sale of my house. So I'm going to probably buy 100 shares of it. And then every single week or every single day, try to run some options where I might be able to make, $50 to $300 extra a day. So do that over a year period. That's an extra, $20,000 to $40,000, depending on how good you do, market conditions. So we're going to try that strategy, and we're going to see if it's better than investing into high income ETFs. High income ETFs have a little bit too much NAV erosion for my liking. Because for me, I'm in the camp where if I'm investing into a fund, I don't want it to NAV erode over time. I want it to appreciate, and I also want a distribution. The distribution is a bonus. So if the fund is not performing well, should be paying out distribution. And then I don't want them to pull the money out of the NAV to pay out the investor. Just don't pay me that month until you're profitable. It just makes sense. So I'm going to try to do this wheel strategy and see if I can outperform these high income ETFs. I might even buy 100 shares of Amazon and compare it against my amzp holding. So if I can make more money just running the calls myself and I don't have to deal with as much NAV erosion, it might just make more sense for me to just run a wheel strategy. However, there are tax advantages of return of capital for investing in these funds. Eventually, whenever your cost basis reaches 0, then you're taxed at, ordinary income levels. But before that, you're not necessarily taxed on the rock. So there's kind of a couple different thought processes here. So I want to compare both, right? And then whatever one over this next year period performs better over time, I might just adopt that one fully, or, I might just have both strategies, one for tax advantage and then one for, hey, I'm just going to be running these options and see how it goes. So we'll see. But now let's go to the distributions and how the individual funds have performed and my account has performed. Okay, guys, so let's get started here with the weekly distributions for the week of March 17th through March 21st. I made $1,174.02 in distributions. If we scroll down to our account total, basically, this is the amount of money I had to invest. Anything above this or below this is either the money I lost or the money I gained. But this is the initial investment. This also incorporates my 234 Oracle shares that I brought over from Fidelity. So currently my account is valued at $273,121.17. Now let's go over to xdte. So the way that this value works, the xdte value, my initial investment was $58,750. So like I said, anything above or below this value is either a loss or a gain. So let's see what it looks like. So for last week, my current xdte value is $56,349.11. So the market has been going on a downward trajectory, but I think the last week a little bit stabilized. So I think we might start seeing a upward momentum, but who knows? Nobody has a crystal ball. This is just kind of what I'm observing with the different share prices and how they stabilize. Maybe Monday we're going to have a blood red day. Nobody actually knows. But if we look at the account, it has slowly been trending in a downward direction because of the markets. Hopefully, eventually it's going to go back to normal. And even though the market is down, somewhere between 5%, at least the S&P 500, I'm only down about, what is that? $2,400. So it's not necessarily too bad. I reinvest the dividends, anything that's below my cost basis, not really a dividend, but a premium. I reinvest any premium that is under my cost basis for these shares. Anything above that, I'm going to probably pull out and move to a different investment. So that's kind of what I'm thinking about. But moving on to the premium that I was paid this last week, that's $396.94. There's a pretty thick premium, even though the market's going down. So that was quite interesting. Maybe they're running a ton of puts to generate that cash. Okay, moving on to rdte. My initial investment into rdte was $59,295, and the current account value for rdte, or what I purchased at, or the current rdte value is $54,533.64. This is the one reason why I like rdte, because it pays a higher premium than xdte. However, it is a little bit more prone to NAV erosion. The premium I made for rdte for the 12th week of 2025 is $488.28. And here I threw in my Oracle value, so it's about 235 shares. That's valued at $35,835.15. And the way that Oracle works, it has a dividend, not a distribution or a premium. They pay out once a quarter. And I don't know when the next payment is, but when it does come out, I will have it on this spreadsheet. Moving on to the amzp value. The amzp value is at $40,000 when I bought it. And then currently the amzp value is at $34,708.86. So this is kind of what I was talking about earlier in the video. I might think about buying 100 shares of Amazon and just running covered calls against them, or cash secured puts when I do have them called away from me. And we're going to see if we can generate more income and eliminate NAV erosion as compared to investing into a high income ETF like amzp. And when it comes to YieldMax, I'm trying to tend to avoid them, except for my nvdy. The nvdy, I'm kind of committed to just paying off my HELOC loan with those shares. I'm going to have to bite the NAV erosion, but eventually it's going to pay off the HELOC loan, which without me having to pay a cent of my own money. And yeah, but we'll see how I can compare against Kurv funds, because I know I can beat YieldMax, at least with the NAV erosion aspect. Okay, and so for amzp premium, there was no payout. There was a payout the week before. And for Goop, so I initially had a $20,000 investment into Goop, and the current investment is at $18,226.09. And last week, I made a premium of $288.80 from Goop. I'm even thinking about doing the same thing, maybe do another 100 shares of Goop, or not Goop, but Google or Alphabet, and run covered calls against them and see, could I make more money than $288 with a $20,000 investment? I'm pretty sure I can, but we will see. I haven't decided what I want to do yet. I'm going to have to think about it, and I'll let you know tomorrow, Monday. For NVIDIA, it's kind of what I was talking about. Initial investment of $33,884.55. Current investment is at $26,039.85. There was no NVIDIA premium. There should be one coming up next week. And gpix, my current investment in gpix is $28,043.97. And the current share price is $26,792.46. No gpix premium, so we're going to scroll past that. jepq value, we will talk about jepq. So my initial investment was at $21,915.48. Current investment is at $20,000. $636.01. There was no jepq premium. There's going to be one in about 2 weeks from now. And that wraps up all the distributions and what the individual ETFs I'm holding are performing. I did buy them at a relatively high point back in December, and the market had, that 5% correction. So I am going to be taking an L in that regard. However, long term, I think these funds are going to perform just fine. All right, guys, that wraps up the video for the 12th week of 2025, my account performance. Let me know what you think in the comment section, what I can change, what I can do, another potential avenue of making more money. Let me know. Hope you guys are all doing well out there. That wraps it up. Matt out. See you in the next one.